Good evening, everyone. Welcome to today's session. Today's topic will be on avoid the shakeout traps with the big boys. I'll be your presenter for this evening. My name is Anthony Ong. Let's proceed with today's topic. Now, yesterday you have listened to my colleague. He was sharing with you the topics on chips collection at the bottom. So today we're going to have a different topic. We're going to identify the shakeout traps. Let's go through the content for today. First, we'll describe a little bit about the market cycle, and then we'll look for which indicator is suitable to identify the shakeout traps, and also which intuitive indicator can be used to identify the shakeout traps too. First, market cycle. This is a schematic diagram of a market behavior, and this is also a institutional trading pattern. Now, the blue lines will represent the stock and asset movement. We'll start from the left. Now, assuming that there's a downtrend, and once you hit a certain low position or a base, the market makers or the bankers will start to do action called accumulation. Once the accumulation phase is completed, there will be a new trend form, and everybody will try to catch in and ride the trend. Once the trend reaches to a certain high location, you will reach this point and create another base. So at this point, it will be deemed as a reaccumulation. Now, sometimes it may be known as continuation of the market trend, right? Now, once the reaccumulation phase has completed, most likely a new trend will begin again. And again, the market will reach a certain high. You start to perform a accumulation now, but at the top, this term is no longer called accumulation. Instead, it is called a distribution because it is deemed that the bankers or the market makers will start to sell down. Now, once the selling pressure starts, you will create a new trend, but this trend is no longer an uptrend. It will be called a downtrend. And as the direction move further down, you reach another base where the bankers will start to take a rest. Now, at this point in time, the terminology is changed. It's no longer called a reaccumulation, but instead it is called a redistribution. And then once the rest is completed, a new trend direction will be formed again and the downtrend will continue. So this market cycle will repeat. A simple schematic diagram to describe this, but let's look at this in a normal market candlestick. Now we're going to use the monthly chart here. So one candlestick represents 1 month of trading days. So you eliminate a lot of noises. So let's look at this candlestick chart to represent the market cycle phases again. We start from the left. Now it begins with a downtrend, and once the downtrend has reached a certain base, we'll notice some accumulation patterns will start to form. And once the accumulation pattern is completed, there will be a breaking out of the trend, and the uptrend will proceed. Now thereafter, the market will come to a rest again, and you will form another new accumulation. At this point in time, we'll call this as a reaccumulation. And once it has gathered enough energy, the rest is taken, you will start to form a new trend. So this will repeat itself. Once you reach a high position, the market will start to take another rest. But at this time, most likely they're going to start to sell down. Now, when it started to sell down, the market may reach a new base. Now, over here is a bit special because it's in between these two phases. It's in between these two phases. So the downtrend direction could be they are fighting between the distribution and the reaccumulation. But eventually there will be a base form again, and it started to break out. Okay, you break out and then you come back for a rest prior to finding a final direction which is going uptrend. So once a new direction is formed, the market will go into a rest and a reaccumulation base is formed, and take another new uptrend. So this is repeated on the left side. This is repeated on the left side until the final location where the market will determine, and it starts a downtrend. Now this will kick off the opposite direction of downtrend distribution and a new downtrend redistribution and downtrend again. So this will repeat itself until it forms a new base. All right, so it's very interesting. Now this is the monthly chart where you can see clearly the direction. Let's look at this on the weekly chart where there's slightly a bit more noises. Now we will use the left side where it's marked the various accumulation zone. So assuming that the downtrend, uptrend, it started to have some kind of accumulation, and then when there's a new trend breakup, it forms another base, some form of accumulation proceed, and a new trend created. And when it reaches a transitionally high position, again, get ready for market to sell down. Now, sometimes you may see some topish pattern here, and this is also a form of distribution pattern. Now, once a new direction is formed, right now will be down. Once it reaches a base, accumulation form again, and then when you break up a new trend, this market will repeat this cycle. So on a weekly chart, the candlestick is a bit more, and we can see that quite interesting. We can spot the uptrend and also the various accumulation zone where we can see certain part of the trading is not so easy, whereas when there's a trend, it's more easy to take opportunity. Again, this is on the left side. Now, once you reach the high, the opposite will appear. You will start to have a downtrend followed by a bounce, reach certain place where there's a redistribution and a new downtrend direction is selected where it reach another base and we have a bounce. All right, so take note of this market cycle is always there. All right, now let's look at a different time frame. A smaller time frame will be daily chart. Now, daily chart has the most noise. Again, a quick one that you can see that at a certain point in time, there is certain uptrend. But there is also certain accumulation that we have to be careful. And here is a distribution where you can see there's a topish pattern followed by a new downtrend and a base. So on a smaller time scale, which is the day chart now, there is more noises. I'll say there's more noises. So if you are a bit cautious, only at a certain point in time, we can take some trading and investing opportunity. Now, the opposite side, when it's going down, is also very fierce. Okay, so this one will be a quick one. Market downtrend, bounce up, certain area to have a base, downtrend again. Okay, so I'm going to skip this part because most of you can see the direction and the cycle with these three different time frame of the market cycle chart. Now, we need to be careful, right? We need to be careful. So before you proceed further, this is a little bit of snapshot of a specific zone. Now, we'll use this to analyze the main forces. Sometimes we call them as institutional. Sometimes we call them as banker action, or we may even call them as big boys. Now, on a smaller scale, at the accumulation area, we may also call them as chips collection. All right, chips collection. When there's an uptrend, we may also call them as a market testing phase. And then when you go into a reaccumulation, sometimes you may heard the term shakeout. So in Chinese, we call them as 洗盘, like washing the plate. So a bit of more terminology is like it's a washing out the weaker hands, washing out the weaker hands. So that's why it's called a shakeout. And then after the shakeout, a new uptrend. Here we may call them as a price pushing phase because this is a very, very lucrative rally up. And when we reach a transitionary high, it's going to be a take profit zone. Now, take profit zone, we can see that most of the time you can see some topish pattern, and you can see the final chip distribution where it is a sell down. So this will also be repeated in the market cycle, but in a different terminology. All right. So today in this topic here, we're going to focus more on this zone shakeout. All right. Now, sometimes shakeout can be very small. Example, all these pullback, all these pullback, all these pullback can be a small shakeout. Right. So the objective today is how to identify this shakeout and maybe how to avoid them. So remember, in a downtrend, skip this to take any trading opportunity. This is very, very dangerous. Instead, try to identify the primary uptrend and look for the various accumulation base to take opportunity or get ready to take opportunity. Or this is where the area of the shakeout activity will most likely occur. Again, look for the uptrend and the accumulation or reaccumulation bases. Always remember, on the left side, this is where the shakeout most likely will be. All right, so once we know how to identify them, then we can learn how to prevent them from happening, or at least prevent ourselves from being trapped in a way. Now, I have selected this final phase between point A to point B as a presentation to identify the shakeout area. All right. Now, why this is selected? If you imagine that you're going to have a trend line from this point to this point, now this is still a valid uptrend. All right, this is valid uptrend. So we'll be looking for this pot up all the way from point A to point B. Where is the potential shakeout area to identify them and see how can we identify and maybe make use of it into our favor. All right. Now, so we will need the help of some indicators, right? We need the help of some indicator to identify the shakeout traps. Now, over here, we'd like to introduce the RSI as a potential indicator to avoid the shakeout traps. So let's go through a little bit of this RSI indicator. Now, the Relative Strength Index RSI is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold condition in the price of a stock or other asset. The RSI is displayed as an oscillator. There is a line graph that moves between two extremes and can have a reading from 0 to 100. So let's look at the scale. Now on the left side, there's a grid from 0 all the way to 100. So this is where the range will be limited, 0 to 100. It's divided into four scale here, four smaller scale here. So when we look at this, now below 25 is considered as an oversold zone. Now over here is deemed that the stock or asset when it's below 25 is reaching the oversold. It is also considered sometimes is a potentially safe area, and you may want to look out for certain buying opportunities here. When the stock and asset is between the 50, now between the 50, we have to look at two sides. When it's below 50, it's considered that the stock and asset is in the weak zone, whereas when it's above 50, it's considered the stock and asset is in the strong zone. Now, so for us, we're interested to look at this area. This area and above is considered the strong zone. It will be better for us. When it's below, try to avoid. We don't want to take opportunity in the weak zone. Try to take opportunity in the strong zone. And we got one more value, which is above 75. This is considered as overbought zone. So over here, when the RSI indicator is above 75, it is deemed that the stock is entering this overbought zone and there's a potential risk. Now, what kind of risk? The risk will be this stock might be hitting a transitionary high and may turn and pull back down. So it's also a potential warning that it's time to be alert, maybe time to get out of the stock and asset. All right. This is what it means. So what I'm going to do with this indicator is, now this candlestick chart that you see is a special candlestick chart that I have used certain signal. I use certain color to represent the RSI to help us to visually see easily. Now a little bit of legend. Number one over here is when you see a RSI break above 50 is represented by a blue candlestick. K represent candlestick. It signifies that there's a buying condition surface because the stock and asset is breaking up above 50 zone, entering a strong zone of RSI is considered a buying condition. Now, when the action for sell is when the RSI breaks below 75 or is at the end of the trend. So currently, this particular diagram doesn't have an RSI below 75. So what it means is, if you see that the RSI indicator is going above 75 and suddenly it U-turns down, it breaks below 75. So this will also triggers a selling action. Okay, this is one. Now the other one is when there's an end of trend. Example, this is a trend line. When there's end of trend, example like this bearish candle, it breaks below the uptrend line. This also triggers a selling condition. All right, so there's two options for you to consider a selling action. Now note, when we see the pink color candlestick, it means that the RSI has break below 50 and is entering the weak zone. Stays alert. It may go into a weaker zone. Now the stop loss is below the RSI key candlestick, that is below the blue candlestick low price. All right, so what it means is, if you have entered a trade with this RSI, the low of this RSI key candle will be your stop loss. Okay, will be your stop loss. This is what it meant. All right, we'll share a little bit more with the following chart. So remember, I'm going to use this section here from A to B as a presentation to identify the shakeout with RSI indicator. All right, get ready. Let's go. Now, if you look at the previous chart, now remember the previous chart. So what is the basis? The basis is this long-term uptrend is still valid. The market has come down here, pull back and touch the support of this long-term uptrend line. All right. Now, this is where the candlestick movement is. Now, over here, there's two blue line that is drawn. This also signifies that there's a resistance trend line here and there's a resistance trend line here. Now, over here, you may think that, hey, there's a blue color candlestick. Now, this one is advisable not to take any trade because if you follow the condition, if you've taken this trade, remember that the closing price break below the stop loss, you exit. All right, you exit. Now, we have to include some technical analysis to assess this, whether we can take a trade. Now, currently it's still in the downtrend, trying to touch this A line where there's a uptrend support line and there's a bounce. All right, previously this one not valid. Right now we see here that there's A point here, it touched a certain uptrend line and it's found some support there, started this bounce. So currently there is a blue color candlestick appeared. So it signifies that currently this bounce is the first RSI above 50 point. And you decided that, okay, you might want to take a test position. If you did that, please immediately follow up that this low is your stop loss. All right, this low is your stop loss. So assuming that you have taken a trade here, you have a testing position here. Now, let's see what happened after that. The price action movement has moved up a little bit and it touched the resistance line. Now over here, you may consider that if there is a end of the uptrend, you might want to sell following days. All right, you may want to sell. All right. Now over here, there is no RSI break below 75. So the nearest one is when this uptrend line is broken, you sold your position. All right, so assuming you did that, you had did a potential profitable trade here, and then you get out, you wait for another opportunity. All right, so let's continue. Now, then you comes and see that there's a pink color candlestick. So it's telling me that currently RSI has went back into below 50, entering the weak zone. Be alert. Okay, there's another blue color candlestick. So immediately I know that RSI is above 50. Now, right now, if I want to take a test position again, yes, you can do that. Now, if you want to follow a new trade, always remember this immediately plan your stop. All right, plan your stop. This is the only way to protect yourself. Now, unfortunately, this trade if is taken the next few days, the closing price has break below our stop. We didn't make any profit here. All right, so 1 plus 1 minus. Now let's move on. There's a third blue color candlestick appeared, and okay, you think about that. You make one positive, one negative. Okay, let's try again. You decided to take another test position, and you maintain your discipline. The low of the candlestick is your stop loss. And let's see how this work out. Now, over the next few days, it's a bit exciting because there's some intraday trying to break below the stop loss, but end of the day, the closing price retrieve back above the stop, so we never exit our position. We are still holding this. And then another candlestick showing that RSI back into 50 zone. Now over here, it's advisable that you just enter a trade. You just enter a trade here. So try not to be greedy. Also try not to add on position again, because overall you're still inside this consolidation zone. Be a bit safe. You already have one testing position. Now, for those who didn't open a test position at 3, you may see that, okay, you never open at 3. Right now, you want to open this position again. All right, you can do that. All right, so depending on where you are. But we still have one position. Now, over the next few days, I have drawn an additional uptrend line here now. So this is currently the short-term uptrend line. And you find that this particular movement, price action break up the downtrend resistance, and it quickly make a U-turn. Now, are you able to sell at high? I'm not sure, because not many people can do that. So assuming that you didn't manage to exit at the high, you are still holding it because your stop loss has not been breached, whether it's number 3 or number 4. In this case, number 3, the stop loss has not been breached, and if you buy at number 4, your stop loss also has not been breached. So you're still holding this position, any one of them, but I'm still holding at number 3. There's another number 5. Now you have to be a bit careful. Now I can see that between number 4 and number 5, the intraday has some low point breach. Now, as I shared earlier, the basis for myself is only the closing price is break below the stop loss, then it's considered a sell. So intraday is a break, but the closing price stands above, it is still not a sell. So we are still holding this position. All right, we're still holding this position. Now, for those who didn't bought at 3 or 4, you may think, I missed out the opportunity. You may want to try to enter at 5. Yes, you can. So this is for you to consider whether you enter 3, 4, or 5, but you're still holding it. Remember, if you're entering at 5 now, the low of the 5 is your stop loss reference. So for me, I have entered at 3. I'm still holding my stop loss. Okay, now, after a few days, the trend of this particular stock asset went in my favor, and it break down the downtrend line. So I have in profit right now. So right now, on this particular day, the RSI is a pink color candlestick, and at the same time, it break below 50. So the closing price definitely is below. All right. So in this case, I will execute a sell. So you have a potential first run again on this, whether you buy here, or you bought here, you sell here. So you got one run. You got one run, you make profit already. So you're happy, you collect your money, wait for opportunity. Now, is this down downtrend line is no longer there. This downtrend line is no longer there. So we're looking at this uptrend, whether this uptrend is able to continue further up. Right, let's see how it goes. Now, over the next few days, another blue candlestick appeared. RSI is above 50. So right now, coincidentally, this RSI is also stand above the uptrend line. So it give me a higher signal. Okay, I will try and buy another new test position, assuming that I did. Now, over the next few days, the market move in my favor. There is no selling signal yet. Now, but do take note. I'm not sure some of you observed there is a RSI below 75. Now, if you decided that over here, 1, 2, 3, 4, 5, 6, you decided to sell, proceed, collect your money and enjoy. All right. But if you're looking at the trend trading right now, you can temporarily waiver this, manage your trend because the trend is still intact. All right. So there's an option here you can choose. So currently, I'm still doing a trend trading. I'll wait for a break of the trend line. There is a new RSI blue color candlestick. Now you ask yourself whether you are a bit aggressive to add position. It's a choice. For me, I'm a bit conservative. I just maintain my first position here. I let it ride. I will not add on position. But for those who didn't enter at 6, you may want to try to enter at 7. So assuming you did, because you saw that you missed this, now is the opportunity to buy again. You may consider that it's a new trade for you. If you have opened a new position here, please manage your stop at the low of the candlestick, and then let's see whether the market move in your favor. Now, always remember, if we are wrong, get out. Yeah, always, if you are wrong, get out. We cannot fight with the market trend, right? But we have to respect it. So let's move on. Now, assuming that you have taken a new trade at 7, congratulations, the market move in your favor. And right now is a RSI pink candlestick, but it has not break the trend. I have not break the trend. But it's an alert for us. It's going to enter in the weak zone. But it didn't. It come back another RSI above 50. Wow, so this is a very tricky one. It break down and break up again. So what is it trying to do? You have to be careful, right? No problem. We just monitor and let the market tell us what is it trying to do. I'm still in profit, whether I bought in 6 or bought in 7. I just manage it. Now there's another pink color candlestick. Is telling me that over here, RSI is going back below 50. I have to be careful and alert. But again, another candlestick, blue color. Wow, this is doing a very quick whipsaw. Your heartbeat must be in exciting mode now. Sell or don't sell, sell or don't sell. Going down or going up. All right. So let's maintain a calm mind. And wow, finally, there's a strong break below the trend line. So right now you execute a sell. So whether you have taken a trade position at 6 or 7, definitely you're in profit. Or get out, you sell. So second run. Now monitor again. You already done 2 runs and see, okay, there's an RSI candle below the trend line. So you think maybe a bit risky, or if you want to walk away from this, yes, you can do that. If you're a bit aggressive, you want to try, because why? You have make money here. Okay, you want to try again. So it depends. So right now, our big conservative is below the trend line. I'll wait. I just rest. This rest, I miss this. It's okay. Now, for those who have take an aggressive trade, you have entered here or enter the next candlestick. Here, there's a sell signal. Then congratulations, you have another third run. All right, you have another third run. So for me, I'm a bit more conservative. This one, I rest. So I make 1 run here, and I make 1 run here, and there's 1 more run here. All right, 3 run for this trade. Now, right now, we have to be a bit careful in the sense that the uptrend line is broken, and the RSI also shows there's a pink color candlestick. Is telling me that it's going below 50. All right. So have to be careful now, because in the future, if the price action doesn't come back to this uptrend line, most likely it's going down. There is a RSI blue candlestick, and it's telling me that currently is standing above 50 RSI zone, but I will still be a bit cautious. Because it's below the uptrend line. Now, for those who is a bit aggressive, you might want to take a testing position again. Always remember, maintain your stop loss at the low of the candlestick, all right? And manage your stop loss. So let's see what happened after that. A pink color RSI which is below 50, so stay alert. And eventually, there's a bearish candlestick. So for those who have taken a test position trade here, there's a sell for you. Please exit. This trade is no longer valid. It's going down most likely. All right, get out of the market. Get out of the market. Okay. Now, if you don't get out, you can see that subsequently the price action is starting is new trend down. All right. So let's look at this. We ask yourself, now, how many times did you manage to buy, sell with profits? Assuming that you have followed the RSI buying, selling condition, that is, assuming you are disciplined and sell when the unilateral uptrend line broken. Example, the amber arrow. So in this scenario here, I'm assuming that you are experienced personnel. You are able to spot the trend. You're able to do many things with technical knowledge, and you are a fast guy. You're a very nimble guy. So if there's a unilateral uptrend, so what is called a unilateral uptrend? There's a price action. This is called a unilateral uptrend. This is called a unilateral uptrend. Unilateral uptrend. You can catch this. Then let's see how many times can you make a potential profit. 1, 2, 3, 4, 5, 6, 7. Now this is assuming that you're very experienced and you're very nimble. You're very nimble. So you may have captured all these potential unilateral trend up and make a quick bucks. All right. Now, what about this? Now, how many times do you get shaken out to sell after buying with RSI? Now, in this case, there is no trend lines drawn. There's no trend lines drawn. Now, assuming that you have followed the RSI buying and selling condition and sell when the stop loss is broken. So in this case, you're purely buying and selling based on RSI without any trend line to help you to gauge. So can we make some mistake here? There is a potential. Now, assuming that you have buy based on this one and remember the stop loss, you get stop out immediately. So you lose one time. Now, the other one is this. Now, assuming that you have buy at 1 and your stop loss is here, so you get stop out. So you get stop out 2 times. And the third time is here. Now, here is a bit challenging in a sense that number 3, you might have stop up somewhere around here because the intraday is plunging down with a very, very strong movement down. So even though I say that the closing price is the basis to get out, but maybe some of you may be scared. This is a very, very strong down forcing you. You may have exited here and you have also been whipsaw. You exit out of the market. And over here at 8 and 9, you have a potential buy and sell here, and eventually where you get stop up, potentially somewhere around here also. And finally 11. All right, 11 is a very clear cut. If you have bought in, you will get out from this market. But 11 is a bit special in the sense that we have identified this as a downtrend, but in this scenario here, assuming that you're not able to identify a downtrend, you're buying purely based on the blue color RSI signal, and you manage your stop loss. All right, so you get whipsaw out from this trade quite a number of times. Now, what about this one? How many times do you manage to buy, sell with profits, assuming that you're using the trend line that follow the RSI buying, selling condition? You sell either the uptrend line is broken or you sell when RSI break below 75. So how many times you can get? 1, 2, 3. So this 3 is where you have managed to ride the trend. Right, the trend from where? Either you buy in from 5, 4, or 3. You are able to ride the trend until this first sell. So you make one run. And then you buy in at 6. This is the second run. Whether you buy in at 6 or you buy in at 7, all right? And then for this one, as I share with you, I'm a bit conservative. I will avoid this one. For those who are aggressive, you have one more because of this run, right? Definitely here, no. This is selling when you break the the uptrend line. Now, for those who are nimble, these two yellow point that is shared, this is where the RSI break below 75. You may have exceeded this from here to here, from here to here. It depending how nimble are you, is a possibility. All right, so this is a potential 5 area that you can have profit from this run. Now, is there a more intuitive way to look at RSI or to look at identifying the shakeout area? Definitely, there's another way. There's another way. So we're going to share with you this intuitive indicator to identify the shakeout traps. Now, this indicator is using a CHIPS. It's more accurate in the tracking of the institutional. There will be 3 terminology here. The first one is called profitable chips. The second one is called floating chips. And the last one is log chips. So we're looking at the relationship between the 3 parties. Now, the indicator name is called multicolor dragon. Here, the red color represents the profitable chips. So in layman terms, this is the group of bankers. Okay, bankers. Sometimes we may call them the big boys. Now, they are company and organization with a lots and lots and lots of money. They can push the market. Okay. The second color is yellow color. The yellow color represents floating chips. Now, they are also company in the market. It is hot money. They are also organization that can push the stock, but they are not as rich or powerful as profitable chips. The red color is the most powerful, but the yellow color is the second. And finally, the green color represents the log chips, which is the retailer, you and me. We are the weakest of these 3 parties. So if there's a lot of log chips, we are not able to push the market. When there's a lot of red color, they are able to push the market. So how can we use this indicator to help us to identify the shakeout zone? So we have some condition. Now, first is we will execute a buy when there is no green log chips plus the red profitable chips break up the purple line. Now, if this condition has appeared within 3 days of RSI above 50, this will be better. All right, this will be better. Now, the second condition is when we will execute a sell when the uptrend line is broken or when there's a first green log chips appear. All right, first green log chips appear. All right, this is the condition. Now, we look back at this same chart again. Look back at the same chart again. Now, when the condition for RSI blue color number 1 appear, we look at the multicolor dragon. There's a lot of green color chips. So even though there is a RSI above 50, there's a lot of green color chips. So green color chip represent the retailer. There's not much banker here. I would avoid this. I will not take this testing position at all. I'll avoid this. Now let's move on. Over here, no action because I didn't take any trade. Now, along the way, there is a potential buying condition. Now, the buying condition, I'm going to zoom in a little bit in case for those who don't understand what it means. Now, you can see that over this particular day, there is no more green color bar in this column. So this means that there is no log chips. And if you look at here, there's a red color bar is above the purple MA line. So this satisfies a buying condition. All right, this satisfies a buying condition. Now, on this particular day, you look at this, it is also price action break above the downtrend line and it's a gap up, very, very strong move. So over here, normally not many people are willing to take this trade, partially because they may scared that after a breakout, they may reverse down. All right, so not many people will take this trade. So depending on your experience, you decide whether you want to take this testing trade. For me, I will still avoid. I'll wait for a better condition that I like to buy when it's closer at the pullback area. All right, so I'll wait. Now, there is number 2. Now, the RSI, in this case, you can look at it, there's a blue RSI above 50, but I look at the multicolor dragon again. This indicator tell me that there's still green chips inside, and the red color profitable chip never break above the MA line. So again, I skip. There's no action on this selling. Now look at number 3. Number 3 again, the RSI is above 50, blue color, but I look at the multicolor dragon immediately. Green color, there is a profitable chips, red color above the MA line. All right, so one of the conditions comply, but the other condition where there is no lock chip, it is still green, it doesn't really comply, I skip. I wait. Same for number 4. There is a RSI blue color candlestick, but there is still lock chip green color, and even though the red color is above the MA line, I will still skip. I wait. There's no selling action here. Now again, this is a bit of your experience. Now here there's a buying condition. You comply with the buying condition. Now, this is a very strong gap up. Not many people are able to take this kind of trade, all right? If you are experienced people, you might take a trade and it's a very quick trade because most likely the price action is going to come back again. So as I shared with you earlier, I'll wait. I'll wait for a safer entry. So I'll skip this trade. Now comes the next one, number 5. So number 5 is not complying because there's still lock chips and the red color bar didn't break above the purple line. So I still wait. Now comes the next day. Now the next day, if you look at the multicolor dragon indicator, the lock chips is no more green and the red color bar is above the purple line. So it complies to a buying condition. And you can also observe it is very close to the RSI within 3 days. So this complies to a buying condition. Now, if you comply this with also the TA, it also happened to be testing the uptrend support line. So this is a very good condition that I will take a testing position here. Now, immediately you take a testing position, what should you do? Your stops. So your stop should be the low of this blue candlestick. Your stop loss is here. Now, if you have done that and you're looking forward, you know that upfront you executed a sell here. And this is a very, very quick trade, very profitable trade. The moment you enter, immediately the trend is in your favor. All right, so it's a one profitable trade done. Okay, now let's move on and look at the next one, number 6. Now, number 6 again, look at the condition. Red bar above the purple line and there's no green color. It complies to a buying. And immediately, this is also a RSI itself. So you can take a testing position for you if you are aggressive. Now you may think that it is testing the uptrend line. Maybe you will not break. You're up to you. All right, up to you. If you are aggressive, you can take a testing position. If you are a bit conservative, you may wait for the second day. All right, so assuming that you're either one of them, you decided to take a test position and immediately remember, if you take a test position, this will become your stop loss. Very, very important discipline. All right, very important discipline because the market can go up and whipsaw you. Now, assume that you are either this or this. Now, the difference between this is a gap up again. Now, why the first two gap up we didn't take, whereas this gap up you may want to consider because currently you have analyzed that here there is no lock chip and the red profitable bar is breaking up the purple line. So it's telling me that there's some banker pushing up. And if this is a gap up, you may try to chase this instead. And second, this is in the uptrend already. All right, so there's a higher probability of success in this way. Now, you decided that you are not able to chase and you forego this, it's nothing wrong. All right, all depend on your individual risk appetite and your experience to identify this. Right, nothing wrong with that. Okay, so assuming that you didn't chase but you managed to buy at 6, is also good, right? You still have a trade in place. All right. Now, looking ahead, remember number 7. Now, number 7 is RSI above 50, but we look at this below. The red bar is below the purple line. So in this case, I will not add in a position. I will just wait because I still got a position here or position here. I still wait. I will not add in a position. But there's no selling yet. So I'll still monitor my risk, where to exit. Now, eventually, the price action move ahead and there's a RSI purple color candlestick or pink color candlestick. Now I have to be alert. There is also another alert. Why? Notice here, there is a green color appearing, log chips appearing. So it complies to a selling condition where the first green log chip appeared. You can start to action a sell tomorrow and exit the market, right? So assuming that you did, if you didn't exit a few days later, observe, there is another second green. So there's a first green, and right now there's a second green. So it's telling you that, hey, get out, get out, get out. 2 times already, get out. You still didn't exit. The final exit is where? Your final exit is here, when the bearish candlestick break below the trend line. So if you're able to exit at 8 or 9, you'll be selling a bit early. If you didn't exit, this is the final exit. Right? Get out. You have done any one of these, this is a profitable trade. So you have how many trade? 1 run here, 2 run here. You have 2 trade. Now you look at the final one, number 10. So number 10 is below the trend line. As I share with you, I'm not aggressive. I will avoid. At the same time, you can see that the red color bar is below the purple line. Now over the next day, the red bar breaks up above the purple line. It stands above the uptrend line. Now over here, you may consider to take a testing position now. Now it complies to a condition. Yes, then I may consider to add in or buy in a test position. All right. Now, assuming that you did, you will be exiting here. So you have another profitable trade. Now, at the same time, look at the multicolor dragon. The multicolor dragon also 2 days later give you a green color log chips appearing. So in this case, we're a bit lucky in the sense that we sell earlier when the bearish candlestick break the uptrend line, and 2 days later, there is a log chip appearing. So nevertheless, this run is also able to make some profit. Now, look at 11. Now, 11, you can observe the multicolor dragon, a lot of log chip starting to accumulate. So at this point in time, we should not think of any testing position. Get out. At the same time, it's below the trend line. Also, don't take the position. All right. Now, let's look at this. Using multicolor dragon, how many times do you manage to buy, sell with profits with multicolor dragon? Assuming that you have followed the RSI plus MCD buying selling condition. Now, MCD stands for multicolor dragon, and sell either the uptrend line is broken or the first green log chips appear. Now we have 1, we have 2, 3, 4, either one of these we sold, and 5. All right. So here is 1 buy, 1 sell, 1 time, 1 buy, 1 sell, 2 time, and finally 1 buy, 1 sell, 3 times. Okay. Now, if you look at this, this is in a downtrend. Avoid the downtrend because there's a lot of log chips. All right, there's a lot of log chips. Now look back at this slide again. Now those various entry points that we entered. All right. Have you spotted something? Those entry points that we entered. Immediately we starting to have some run. right? We're starting to have some run. Now, did we avoid the shakeout? If you look at this, where is the shakeout here? No, the shakeout is over here. Now, what about this zone, number 5? Where is the shakeout? The shakeout is this whole area. All right. Now, what about 6? The shakeout is very small. There's one shakeout here, very small. So imagine we have used the multicolored dragon in addition to RSI to identify a potential shakeout area. And we are lucky that the moment that we enter somewhere around here, we enter somewhere around here, we enter somewhere around here, immediately we're starting to take some potential profit. We didn't waste too much time, right? We didn't waste too much time. So in our stock trading, time is also very important, isn't it? We want to enter a position and try to have a quick run rather than sometimes when we entered here, the market goes sideways, and worse still, certain stock after we entered, the sideways is very, very, very frustrating. The sideways is very, very long, and you're neither here nor there. All right. So this two indicator, especially the multicolor dragon, give us a visual aid to quickly identify a certain key position with the RSI, and we can avoid this shakeout trap, right? Remember, downtrend don't take. Downtrend don't take. All right. Now, another particular area to take note. Now, this is a normal candlestick color with RSI. All right. You can see here is a normal red and green candlestick now without the colored candlestick that I have specially created. Now, in this instance, now you compare with RSI and multicolored dragon. Take a look. Isn't it easier to identify the shakeout phase with the multicolored dragon indicator with the increasing rate profitable chips to take action? And we can avoid the green lock chips area. We can avoid this trap. All right. This is a faster, intuitive way to identify. We only follow the rules of engagement and we can avoid the shakeout. And it's not only that, we can also identify a trading opportunity to take a quick trade. All right. Now, this is a very powerful Homely chart. It's a must try for you. Do try to take this software and give it a chance to test it. Now, how you can do it is very simple. You can search this in the Apple icon in the Apple Store. All right, so go to Apple Store for those iPhone users. Look for this icon. Look for this icon. For those that is in the Android handphone, look for Play Store and look for this icon where you can see Homely chart with Capital Master. All right, this is our genuine icon, and you can download this for a free trial. Do give this a try. I hope you have learned something useful today, and thank you for watching this presentation. The next lesson will be also more exciting. My name is Anthony Ong. I thank you for your time for this evening, and I'll see you on the next lesson.